Today's video is all about Aether, powerful GPU computing solutions on demand. Today's video, we're going to be doing a deep dive into this project, looking at some of the fundamentals, the overall value proposition. We're going to look at the team, the tokenomics, and finally, we're going to try to figure out whether this project has what it takes, if Aether has what it takes to make it to our portfolio for the up and coming bull run. So you know what, let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. And the question is Aether the opportunity? You know, it does sound really interesting, given the fact that we are in a scenario where we're using much more computing power than usual. And of course, the demand is definitely there. And when we see powerful GPU computing solutions on demand, we definitely get bullish here. It does really sound like an interesting value proposition, but of course today we're going to be looking to the project a little bit more into detail. We want to know ultimately, should we be scaling in? How much of our capital should we be scaling in? How much confidence can we have that potentially this project could be a competitor to some of the heavyweights within the narrative? Obviously, the deep-in narrative is a very strong one, and of course there are some major projects out there that are offering great value propositions, but then again, we do have some smaller cap projects such as Aether coming up strong and definitely coming in and trying to, recoup or gain some of that market cap. Let's scroll through this website. We're going to be using the website as our main interface here to kind of navigate the project. Of course, we'll take a look at the white papers and all that good stuff, but let's kind of scroll through here and get a sense of what it's all about. Basically, accelerate growth and get closer to the edge with Aether's distributed cloud computing infrastructure. We provide secure, cost-effective access to enterprise-grade GPUs around the world. This is interesting. Okay, so the first few questions that I have on my mind that are popping out is basically the cost effectiveness, effective access to enterprise grade GPUs. Number one, how are they accessing these GPUs? Who do these GPUs belong to? That for me is a very important thing, because I know they go and say it decentralized, right? Distributed cloud computing infrastructure. And then we go on to say, is this a Web3 solution? Supposedly so. In this case, it should be very decentralized. Now, being spread around the world means a decentralized, does mean decentralization, in the sense that based on geographics, we know that there's no central location where these GPUs are located. However, guys, one of the things that come to my mind is, what about the ownership of these GPUs? Who owns these GPUs? Under which control are these GPUs? And for me, that's very, very important, right? So you can be decentralized in various ways. And here in Web3, we decentralize ownership by tokenization, and then ultimately perhaps even putting a identity such as a company or, a blockchain solution under a DAO, which, decentralizes the actual running and operation of the project itself. So decentralized autonomous organization. Let's keep on going down. Let's see if we can get some more details. I see a few logos here hanging around. You guys know I'm not a big fan of this, because this doesn't mean much. In fact, if anything, it confuses individuals. It may give you false, false hopes, or false ideas. I'm not even sure where these belong, if they're partners, if they're the strategic partners, are they VCs, are they part of their ecosystem? I'm not even sure where they're coming from. So it's nice to see Bybit and Gate. Those are exchanges. I'm sure we can they're listed on those exchanges. And then we have Merit Circle, a finance company here, and these are probably VCs and so on. Framework, again, guys, details would be great. Ideally, we can click these. Ideally, we click and pop up, and then we get some more info. I know there is another section on the website where we can kind of get into a bit more detail, perhaps, and of course we'll get there. Let's keep on going down. 53,000 plus enterprise grade GPUs on demand. That's a significant amount. Over 400 million worth of computing capacity. The overall consensus here is that Aether does provide a lot more computing power, GPU power in comparison to its competitors in the crypto space. This is a good thing. Obviously, we want to know, we want a heavyweight, we want someone a project that can provide, and as of now, we can be a bit confident that it's definitely providing. But again, this decentralization of these GPUs, how are they distributed? Who owns them? Where are they located? And so on. Now, they are a global infrastructure, countries supported around the world, 23 plus different countries, bringing closer to the edge, which is good. Uptime 99.99%, exceptional architecture for superior reliability. Good stuff, of course. These are good numbers. What can else we expect? Unlocking the potential of artificial intelligence. Okay, so this is where we're going to kind of like look into the utility, the actual application of these services, because what they're really offering is a service, a GPU or processing power service. And in this case, we know that there are some narratives or some industries that are definitely gonna, need this processing. Of course, we talk about artificial intelligence, AI. It requires for the machine learning, the learning models, and all the other models that are coming out. We need this computing power, and of course, based on the demand, there is a shortage out there with regards to GPUs, and Aether is there to offer a solution to that problem. And if there's a solution, usually that solution to the problem, definitely has some utility, and people using it, liking it, paying to use it. And of course, that's where you get a bunch of growth. Leveling up the gaming industry, another industry that of course needs the GPUs, and of course we definitely are seeing the crypto space take full advantage of this trend of gaming and Web3. And when we do see projects that are getting into deep in and hosting the infrastructure for gaming and AI, for example, it's definitely an opportunity, right? Great utility, a value proposition is there. Low latency GPUs because of all the decentralization of its geographics, meaning there's going to be GPUs located nearby to wherever you are in the world, decreasing that latency, which is good. Of course, let's move on. Our distributed cloud brings compute closer to the edge, cost-effective edge gaming, and learn about centralized versus decentralized gaming. This sounds like a great read, guys. If you're interested in this concept, decentralization and centralized gaming, this most likely is going to get into the latency aspect. If you're playing a game and the infrastructure is located away from you, you're going to have some lag in between, and that's not something that we really want when you're gaming and so on. So the decentralization things, of course, not having a central choke point is something that is definitely valuable, for security reasons and overall, the health of the network and so on. And safety overall is really good when you're kind of decentralized. There's not one major choke point. So pretty good stuff, good reads there. Become a GPU provider. That's interesting. If you are a GPU holder and you have a GPU and you want to, provide to the network, in the sense you want to render some graphics or provide AI computations, you can get rewarded for giving your resources to the network. Very interesting here. But I think where they're mostly focusing on is looking at high grade, or bigger infrastructures, or in this case, looking for unconsumed or unused GPU power from companies or enterprise. Okay, so that may give them higher quality of GPU, a more sustainable one that has more uptime and more reliable. And ultimately, because of the economies of scale, you can still benefit from the mass purchasing of these GPUs from these institutions, which is good. But then we also have this concept of not having a well distributed. It is going to be distributed, but it would be more distributed if it was completely focused on the retail GPU owners, right? That would be people like you and I that have a GPU at home and want to share our GPU power just to get a few rewards. That would be more. There would be more people out there, more people offering GPU power, but maybe not as reliable or as high quality as an enterprise level, and where a company focusing on providing that resource would obviously give a lot more uptime and more quality. That's where I think they're going with things. Highly scalable, secured and decentralized network. Of course, decentralization offers that security and the scalability. GPU servers and Aether platform, Let's see, easily scale your contributions. Obviously, you can be a contributor, like we said, and grow alongside the increasing demand for GPU computing resources. Strong returns. Obviously, you can earn as you provide. GPU providers become valued partners. That's fine. Good stuff there. If you want to read more, feel free. Now, if you look at the ecosystem, we can open this up in a new tab. I think I may have this already in a new tab, but all good. We'll open it up again. And then there's the docs, which I also have up already. And let's open this up in a new tab just in case. The next evolution of cloud computing, access compute. If you want to actually use it, you can see they have lots of community links, LinkedIn, X, Discord. Their Discord is very, very active at the moment, guys. It's very, very active. I went in there to ask a few questions. Good luck getting any answers to questions, given that there's a lot of chat about all kinds of stuff there. It's a very buzzing community. It's a great community, but I do wish there was a channel on the Discord where maybe individuals that were asking serious questions about technology, about infrastructure, tokenomics, and things like that can actually get in there and iron things out. It's nice to have hype. It's nice in a general chat, but sometimes people do want to do that deep dive research. And I think if the Aether team would identify that, there would be a need for that, for a place where we can get technical and things, it might help for mass adoption, people that want to learn, because education in this case would be key to kind of educate the consumer about what actually is the value proposition that they're offering the general market. And if you're not able to get questions answered and all you're getting is a lot of talk about all kinds of other things get a little bit, it gets a little bit demotivating. Let's put it that way. All right, so we have AI solutions and gaming solutions. We talked about that already. You want more detail, feel free to check that out. The airdrop that was already in place, airdrop was already taken. We'll talk about the airdrop in a second when we talk about the tokenomics. Web3, checker nodes and staking. We'll talk about that in a second, because in the white paper they talk about the different, let's say, tiers or identities that exist on the network to make this thing work, which I think is a great thing to learn anyway. All right, so that concludes the website. It's a decent, front page. It's got pretty much everything you need. You have this pretty much more links up here if you're interested, and the contact us and all that good stuff. All right, let's take a look at the ecosystem link that I opened up. One thing that I don't like about this page is the fact that it seems like what they're doing is mixing up the words here, ecosystem, and then talking about partnerships, and then because you can see here that Ether is a community-owned ecosystem building a better way to distribute cloud computing resources. Join the thriving network of innovative, committed to using the next evolution of computing solutions for cutting edge industry. So what I'm trying to get from here is this, are these really partners, or are these internal, who are these individuals? Like, I can see some links here, but these links, join us as a part, are they partners? I'm not even I'm a bit confused of as to who these individuals are. Now I do see some a phone, okay, is the first decentralized cloud smartphone powered by Aether. I think this is great. I think this could be a great value proposition, because basically having a virtual phone, regardless of hardware, removing the hardware from the software, is actually a great value proposition. You can pick up any phone, log in, and you have your interface there. And then it becomes the point that phones don't really need a built-in operating system, or is just basically an interface, and the phone itself is just a terminal, which is interesting. Like, a lot of good interesting stuff here, but I think what needs to be done here, they need to be defined. Like, who are these individuals? Now if we keep on scrolling down, we have Animoca brands. Like, how are they involved? Like, what exactly, if you start read more, they just talk about Animoca brands, which is not enough for me. Like, it seems cool to have Merit Circle. These are VCs. Like, they're not partners particular. Like, you can't really define a VC as a strategic partner. They're just offering up capital. And if they're not strategic partners and they're offering something else, this is the challenge. This is the challenge for the retail investors to truly understand what is valuable here and what is just, links and, basically logos. This is the problem. So what I would wish to see here is a little bit of this divided up, and organized into some strategic partnerships, VCs, maybe even in-house ecosystem. Like, are these projects being built on Ether? I know some of them are here, but some of them are not, and are or don't have that same status. So definitely something that to consider here to make things more clear and understandable for everybody that is doing some research. So not bad overall. It's at least they do have an ecosystem or some sort of relationships with all of these. Let's move on. We do have a white paper. You can see that the white paper is well established. There's a lot of information here. It's powered by Gitbook, and then there's another information docs. This is the same? Hold on, I just want to make sure I'm showing you the right thing. Yes, it's the same. And then we have the ecosystem. Again, this is a duplicate tab. And this is the white paper, and this is the docs. Sorry, this is the docs, where you're going to get a lot of information. I think that it even offers a bit more information than the white paper itself. The white paper has, a lot of information, but the way it's laid out on the docs is a little bit more interesting. Decentralization. So basically, what they're trying to make everybody understand is that the overall DCI, the Aether DCI, is basically distributed geographically, which obviously makes sense for many things, right? For many reasons. Maintaining the speed, and the platform basically has the ability to have low latency, which is something that they make very clear as a value proposition, which is good. What else do we have? We have this introduces the risk of fraudulent, cheating, hacking, and other malicious behavior during rendering process, but because they're decentralized, it mitigates all of that, which makes sense. Okay, removing barriers, allowing anybody to be involved, right? To get involved is great. No red tape. Aether has simplified the decentralization cloud infrastructure by allowing simply and easily self-onboarding process to by both application owners and in infrastructure owners. So you can get involved very easy. If you have a GPU, anyone around the world can expose their GPU based infrastructure, putting it in the hands of many. So what I'm interested is here is that it's not just a GPU, it's a GPU based infrastructure. So that means that, does that mean that you have to have a full facility of GPUs? Is this in industry business? Is this a business to business type of scenario where you're expecting businesses that have GPUs to offer Aether the GPUs, which obviously, like I mentioned, provides quality versus just the retailers all involved? Or is this a hybrid where you get some of the retailers, if you want to participate, or even industry, or infrastructures that have infrastructure can come in and participate as well? This is the architecture and design of the project itself. There's a layer 2 on Arbitrum, so to reduce fees and all of that. Scalability is definitely there using Arbitrum. So it underpins the Aether ecosystem by providing a decentralized settlement layer. This is where the settlements happen, and obviously it makes more sense because as settlements happens, like offering the rewards, you don't want to be paying a ton of gas fees for all those rewards and all those transactions. So it kind of makes sense. Feel free to check this out. It looks interesting. You have the user, you have the developer, you have the treasury. Of course, this is behind a DAO, so obviously voting privileges come around if you do hold tokens and all of that. Role of an indexer. So there are a couple roles here. Okay, so the role of an indexer, there's a checker, and then there's a container. I feel like the docs does a bit of a better job kind of making this clear. And if we jump to it real quick, and we go to the network, and we see here that you have the overall resource owner, you have the network, the compute buyers and gamers, the treasury, and the settlement layer, right? This explains this. But then here on the left, you have the container. What is the container? It basically, all these different categories, they have a particular job. So the container is fundamental to the Aether network. The container is where the actual use of the cloud takes place. So it's a lot easier to understand. So there's operational considerations here. But if you go down and you look at what the indexer does, which is interesting because it matches up consumers with suitable containers. So the container is basically where all the resources lie. right? So rendering, gaming for players, and AI, whatever you're looking for, all the workload happens here, all the operations happen here, right? So it's something that this is where all the magic happens per se. And then at the indexer is where we marry up the user, or match up the user with a suitable container, some a container that has the resources available, ready to go to provide a solution to their needs. That's exactly how it works. And then you have the checker, which is the third tier, where you have it ensures the integrity and the performance of the container with the Ether network. So if Ether network, basically, if the indexer finds an appropriate container and the container does a great job, the checker will give you the thumbs up. It will check to see if it actually did what it had to do, based on its performance. And the outcome of the checker basically is to check if the quality, it's basically a quality control, determines if penalties or anything needs to be adjusted. Because really what's happening here is you're going to get rewarded based on your rendering, what you render to the network, and it's basically proof of render. And if that happens, and everything goes well, you're going to get rewarded. You're going to get residuals for your efforts, and so on and so forth. So this is what's actually really good, because you can actually become a checker by becoming by buying a node, by getting involved in a node. So a checker deployment, initial deployed by Aether with plans of gradual decentralization. So right now there's a lot of Aether no checkers out there, but bit by bit they're going to start decentralizing those as well. And so schedule influence, priority. Okay, I want to get into where we actually get the that's the indexer, which is cool. And so there's three tiers: session dynamics, service fees, service modes. Okay, two modes. And this is it. By bidding, the system can go up and down based on supply and demand. Okay, so this is quite self-explanatory. I'm wondering what if we go here. Sorry, not here. The container. Yeah, we got a lot of staking and rewards. These are the rewards for the readiness and the service for staking. So in order for you to become a container and to get involved in the network, you need to basically, it's a depend. So there is some physical hardware. Because of this incentivization, good behavior uh, and basically will be penalized for bad behavior. It ensures that the participants are aligned with the platform's objectives, which is to provide high quality rendering and readily available rendering, without lag and all that. And based on that, it basically, you need, in order to be a provider, a node operator, you need to be able to stake some ATH tokens before they can contribute resource to the container. So the container almost contains all the resources, and if you want to be a part of that, you need to be staking ATH. And based on your staking, based on your resource providing, and based on the fact that the checker says thumbs up, yes, high quality, you will get rewarded for your efforts, right? So this is important, because a lot of people, I've been reading and I've been listening and I've been watching, and a lot of people think that you stake it up, you stake up the tokens, and you automatically get passive income. It's not necessarily the case, because what you have to look at is their consensus mechanism. It's proof of basically render. If you render high quality and you're made yourself readily available, that is when you're going to get the emissions. So basically, if the network is active, that means you're actively getting high quality renders. If you're getting high quality rendering and computing power, that means you have an active network, and therefore you're going to issue more tokens. So this a concept of being rewarded and emissions of new tokens is highly correlated towards the quality of the network and the quality of the rendering and the utility of the rendering. If there's a lot of people using the rendering and the service, that means there's going to be tokens issued. If there is none and there is no quality, that means tokens will not be issued. So the worry about dilution as rewards kind of makes me believe that we really have to understand the consensus mechanism. So it's not just a basically staking and getting passive income just for holding. It's not necessarily the case. Okay, so we have to understand it is definitely, there is a consensus mechanism that is directly linked to providing high quality computing power, if that makes sense. Let's move on from this. This is pretty good. The tokenomics. We'll talk about the tokenomics right here. There is a ATH coin, obviously. Genesis date June 12th to 2024. Token addresses for both Ethereum and the Arbitrum network. We have a 42 billion units in total supply, max supply, and this is the overall network information. What else do we have here that's important? Tokenomics. When we start looking at this is very important. Of course, we have the airdrop that happens early on. The team has, obviously, as an early stakeholder, as a direct stakeholder of the Aether project, they will own 12.5%. Investors, 11.5. So we got early investors, early stakeholders, as well as the team, very, very intertwined with the same objectives. They have advisors, all obviously part of this big picture team, early stakeholder type of group. So another 5%. And then you have the checkers and compute providers, which get 50%. These are rewards for everybody that is going to actively contribute to the network. These are rewards. Then you have ecosystem, which I really do appreciate. I appreciate to see that they are allocating 15% to ecosystem growth, because I always say, ecosystem growth has a direct correlation with its utility, and utility has a direct correlation with its tokenization, and or its coin. In this case, why else would you want to hold it? Well, because the ecosystem is growing, and there's ways you can spend those coins or those tokens on the network to provide or to receive benefits. And ecosystem is the only way you're going to provide benefits, is through applications, dApps that are being built on the layer, on the network. So good stuff, not too bad. We do see that rewards are heavy. Ecosystem is not bad. I'm assuming that's going to be held by the DAO and distributed by the DAO, and this is going to be held into a vesting schedule. Let's take a look at the vesting. You can see that the vesting right now, there's a cliff for the team, 36-month linear vesting. So over time, there will be tokens will enter circulation. This is important, guys, for those of you that are new to crypto. You want to understand that this scenario right here is what prevents dilution for people that are holding. If people are holding right now and tokens come out slow and steadily, that is healthy for everybody that is holding. But if they came out all at once, the people that are holding basically have the fear that the price is going to come down because of too much supply entering in circulation all at once. So vesting schedules, kind of deter selling, and obviously deter the dilution of the price, because the slow trickle of tokens or coins entering the market. Okay, so this is great. We have the airdrop that obviously is on a vesting schedule as well, but these are early people that got in nice and early in season 1, season 2, season 3. Ecosystem, we also have 50% that was already given out, the 50% of the 15% already out at TGE, at Genesis date, when the token was released. Okay, 24-month linear. So over time, over the next 2 years, more ecosystem capital will be introduced, and DAO a treasury 48-month linear. So the DAO is going to be controlling the treasury money, tokens or coins, and of course everything in a DAO will be up to voting and proposals and all that good stuff. Investors, 12-month cliff, 24-month linear, again slow and steady over the next 2 years. And I'm noticing that a lot of this unlocking is going to begin about a year's in. I feel like a year is pretty much the sweet spot here. And why I'm saying this is because the year really kind of marks where, if we're bullish right now and we believe it's a bull run, a year would be maybe the top of the bull run. That might be the case, right? So we got to keep in mind that based on what I see here, you don't want to be holding this longer than a year, right? Not that it doesn't have any long-term growth, meaning in the next bull run. I just feel like the incentive to sell for all these people, all these individuals that are in these different categories, the incentive to sell after a year is quite high, because that's when we start to see a lot of the unlocking happen. The most of the tokens are going to be in circulation, and it just so happens that it might be the top of the bull run where everybody wants to kind of take profit anyway. So what I'm trying to say here is, guys, if you're going to have a long-term vision, be careful thinking about holding this for multiple multiple cycles or within cycles, meaning bear market, holding it through the bear market, in my opinion, is not a good idea. It does look like it might come down a good amount. Guys, altcoins come down significantly in a bear market. Just keep in mind, it's not just Aether that will do it, right? A lot of projects will, right? Even the best ones out there. But the fact that there's so many tokens coming out after a year, guys, I wouldn't be holding this. I would be very careful as to how these VCs will be taking profits once they see weakness in a bull run. Okay, just keep in mind. Let's move on. The utility, the purpose, transactional, obviously to drive the network, transact to power the network, however you want to think about it, getting in and out of the, paying for different services and so on, engage with the operators and compensating and so on, and all the computing power is all going to be driven by this utility token, and the ATH token is going coin token is going to be there to provide that utility. Diversified application, this is what kind of bothers me here, is because this point right here doesn't really belong, in my opinion. Obviously, let me know what you think in the comment section below. But what they're really doing is great. What they're saying is valid. I'm not saying that, but it's not really utility. It's explaining the future utility and the possibility of growth and utility of the token. Basically, as the ecosystem grows, like I've always said, like I say this many times to whenever I do deep dives, basically, as the ecosystem grows, there's going to be more use case for the ATH token, and this is why the value proposition might go up. Guys, of course, that's the case, but it's not really a utility. That's not what we're going to be using it for, right? We're using it. What can we actually use the token for? Governance and participation on the DAO. Very clear. That's obviously the third point right here. That's what we could use it for. You hold, you stake, you hold, you know what I mean? You can be a part of the governance. Perfect. Staking, all obviously earning passive income based on being able to stake, and through the consensus mechanism of being rewarded through the proof of rendering and so on, you will definitely get rewarded. And this is a direct utility. So good stuff there. I just feel like this is provides an area of ambiguity, and it doesn't really, if it wanted to be a side note here at the bottom, that would make more sense in my opinion. But of course, let me know what you think. Let's keep on going down. Rewards, backing node operators and upholding container standards, proof of rendering work, proof of capacity. Guys, this is their consensus. This is what we really have to understand. It's not, but I've heard some people say on the socials that it's a bit of a Ponzi-nomics or whatever you want to call it, because you stake up and then you get rewarded, and it's the only way it wouldn't be really sustainable is if you were staking and you were getting rewards, just by staking. That's not the case. You have to have proof of work. You have to have proof of rendering work, some sort of high quality output. Now, if there is no output, if there is no work being done, you're not going to be getting rewarded. So therefore, if there's work, that means the network is active. And if the network is active, that means there's people using it. And if there's people using it, you know what? Then it's valid. It's valid. We want an active network. We want people using it. If people are using it, guess what's going to happen? We're going to have transaction fees. Transaction fees is going to make Ether profitable. So this is something that we have to understand. Is economics is not easy. I get it, but when we're integrating technology into traditional economics, we have to understand that there's mechanisms here, and the main mechanism for all crypto is the consensus mechanism. And how does that work in relation to the tokens? Here it is: proof of capacity, proof of rendering work. Guys, do your research. Feel free to read this in more detail. It'll make you fundamentally bullish going forward. Let's keep on going down. Rewards and emissions. Again, feel free to read this. More in-depth information regarding exact compute rewards, emissions, and so on will be released in the future. Just keep in mind, this project is fairly new. Okay, it's very, very new. It's got a lot of work, and I do see that a lot of people are concerned about its overall market cap, and it's fully diluted. Guys, it is concerning. Fully diluted is large. We'll talk about the tokenomics in a second. The checker nodes, there's a lot of information here about the checker containers, the checkers, the indexers. We talked about this. The fundamentals of the containers is to basically it basically holds all the rendering computational power, and the checkers check the quality, and the indexers match the users with the containers, and so on and so forth. Guys, read this again. I'm not going to repeat myself, but interesting way to get involved on the network and to provide quality or provide sustainability to the network. Interesting stuff here. Let's keep on going down, and then it kind of summarizes pretty good. I'll admit the documentation is quite clear here on this doc. We got a lot happening. A GPU provider guide. There's a role of the GPU provider. If you want to be a GPU provider, it's definitely available to you. It seems like there's a lot of openness and not so much red tape and friction to get involved, which is good. The roadmap, nice and clear, guys. So there's very few projects out there that are willing to put dates. At least they get into the quarterly time frame to show individuals where they'll be putting their efforts in the next little while. So it's not bad. They have the 2025 H1, so good stuff there. You can zoom in and kind of see what's going on here. And they have the Ether Air cloud phone service, Ether platform wide development. So there's a lot happening here, and I'm glad to see that they're hitting their milestones and they're working through things and so on and so forth. Okay, so that's that. Let's go back to the white paper and see. I know there's going to be a better repetition. I kind of like the docs better than the white paper, to be honest. And of course, they talk about gaming, the gaming narrative, and the AI and other application and use cases. The use cases, as we are as the industries, the tech industries, start to realize that data is the most valuable commodity out there. We start to look for hardware that's going to allow us to synthesize the data effectively. And we know that GPUs right now are at the forefront of this technology. Right? Multi-core processors are where it's at with regards to, basically doing small, minute computations at high speeds. And in this case, Aether basically came out, basically running out of the gate with a solution to the shortage, to the problem that we have here with GPUs. Now, there are other projects that are doing a similar thing. Solutions, real time, image quality, decentralization. Again, with this decentralizing scalability, removing barriers, we talked about this. Guys, we talked about a lot of this. Now, let's talk about the team. I didn't find anything clearly defined about the team. Now, I went on this website, swissborg.com, Alpha, and they have a page on Aether. So this is brought to us by Swissborg. A bit of research here by them. Key points. Experience management, guys are going to get into more detail there. Right product, I agree. GPU, massive total addressable market, 1 trillion opportunity, GPU infrastructure, I agree. A compelling business model, for sure. Two-sided ecosystem allowing faster and more effective scalability, I agree. And high value flywheel as enterprise compute demand. Of course, we know that all of this is valid. So again, I know I went through these key points, but feel free to check them out. Now, the team, I want to get right into this. These are not clickable. You got to go on LinkedIn and figure them out. So I went on all of them. I'm going to just go on two of them. Let's go on Mark Ryden and see what he's all about. He is the co-founder, one of the co-founders. And if we scroll down and we start to look at his experience, he is the co-founder. Of course, he's been present for 3 years, but he's also full-time and present as an advisor at Not a Club, which is a never game alone again. It seems like a gaming platform. Favorite games, whether you're a streamer, a call, or just a casual gamer, Noda helps to create meaningful. Okay, so it looks like he's in the gaming industry. He's also a part-time partner here at Flux Capital, a VC. Providing capital, I'm assuming that's usually what they're called and what they do, and he's part-time there. He's involved there for the last year or 2 years. Okay, so that definitely is interesting. I don't see any major integrations or acknowledgments of involvement in the crypto industry. And if we keep on going, we do have Paul is another individual, the CRO of Aether. And if you go scroll down and look at his experiences, he's has experiences in the gaming, and he's presently involved and self-employed in this company, right? Trigger Spot or something like that. It looks fine. Like, obviously having the experiences is great, but I start to question because I looked at all the other individuals, the main founders, the main top tier team. Basically, they're involved in other projects at the same time. So I start to question, like, human resources, like how much effort are they putting into Aether? I know it doesn't necessarily have to be a full-time thing, but it would be nice to see at least one of the CEOs or one of the founders directly involved on a full-time basis. I'm not really seeing that here. The dedication, complete dedication of at least one individual. Now, maybe that might be the case, but I don't see it here on LinkedIn. And of course, there's nothing on the website. So I'm a bit grasping for straws. I'm just providing the information that is available to me, and I'll give you some more information on other top team members in a second when I go through my overall summary. At the current moment, it looks interesting. They look very qualified. I still wasn't able to see anybody that was front running the tech side of things with regards to blockchain technology and integration, and to keep up with what's happening in the blockchain environment. That's my take there with regards to these two team members. There's obviously more team members, and we'll talk about them in a little bit more in detail in a second. All right, let's move on from that. We were looking at the tokenomics before. I wanted to show you this page right here on Crypto Rank, and you can see that I should have showed you this earlier, but it's all good. We'll kind of bounce back and forth a little bit. You can see the token, the distribution. A lot of 50% of them are going as right into here. Basically, at their current rate, you can see that we're getting unlocks bit by bit based on timing. Obviously, there's a few tokens going to be entering circulation. You can see that about 5.6% to be unlocked on a very nice schedule, right? Unlock 4.28 million tokens, which is only 0.01% of the max supply, and so on and so forth. So we got the dates, July 21st, July 22nd. So you got a very, a frequent schedule of unlock here. But again, we got to look at the unlock schedule. The unlock schedule that we defined already was very, very clear. And I think this website does a great job to show you the different batches or the different linear unlocks that begin. You can see some of them have already begun. Okay, with their cliffs are coming up for the investors and the teams in December 2025. And for the investors are going to be the, June 2025, and so on and so forth. So this is things that we have to pay attention to. So this website does a great job to kind of keep you ahead of the game with regards to tokenomics. I kind of like this, so keep that on your watch list. What else do I got for you guys? I think that concludes. We got a good overall picture of what the project is all about. So let's jump right into my infographic. You guys know that I released that infographic for you with each of my deep dives. I'm going to be listing it or posting it on the socials. So here it is. We got Aether, the overview. Let's begin by looking at some of these details here. The overall ecosystem. Guys, the website was very confusing in the sense that it confused a lot of those different logos. Like, I wasn't sure what was part of the ecosystem or not. There was a different partners. Were they partners? Where did they belong in the grand scheme of things? I think that a little bit of work needs to be done to kind of subdivide them and be a little bit more clear as to where I know there were VCs all up in there. I know there were some projects that were in there, like that were built on Aether. So I'm gonna give it a 5 out of 10 because I am with the ambiguity. Ambiguity is risky, guys. Ambiguity is risky, and of course, from a retail perspective, to expect a retail investor to have to dig into every single logo that you post on a website. In fact, what we need to do is start vocalizing the fact that the team needs to be a lot more clear. So, and this is my way of doing it, guys. 5 out of 10 here. I'm not confident as to where those logos and those companies belong within the relationship structure of Aether. Okay, so although it looks good, I would like more information. Information is what I'm critiquing here. Utility, 10 out of 10, great. Transactional utility, governance and participation and staking, very clear, concise, straight to the point. A roadmap, another great indication of a team that knows where they're going and where they'll be putting their efforts, and that information is easily relayed to the retail investor. We know exactly where they're going to be putting efforts in the next little while. 10 out of 10 right there. The team, the CEO, let's move into this a little bit more, is full-time at Not a Club and partnered a VC fund. The CBO is a full-time at Infinity Ventures. The CTO is a business strategist in tech, which no emphasis on blockchain particularly, or if there is, I feel like it needed to be identified. The CRO presently employed at a gaming consultant company. So we see a little bit of lack of focus perhaps, or in two different scenarios. Overoccupied occupied with other projects and other companies, and also not enough presence of blockchain talent. If there is, I would have loved to see it. Please update your LinkedIn's, or provide some information with regards to who's involved in that aspect of the team. Again, information is key here, guys. The socials, has been coming down a little bit on the X. Followers in the last 30 days have been down 76% in comparison to the last month. So they're losing a bit of traction here. In the last 30 days, their tweets have been coming down a little bit, about 3.8%. So really, I'm not keen about that. And I went on their Discord, which I'm going to talk about a second. The Discord was great. The lots of hype, and we'll talk about that more in a second. Tokenomics, 9 out of 10. Clear vesting schedule of to avoid dilution. Early stakeholders only get about 35% of the tokens, which is good. Which again are usually which are governed by the dilution or the vesting schedule. The remaining 65% basically is distributed to by rewards and equal into the ecosystem. Good stuff there. We want rewards. We want to get people active. We want to get the ecosystem going. And remember that the rewards are governed by a consensus mechanism, right? The consensus has to be considered here with regards to rewards, because rewards are not just dilution, right? Because rewards are giving people rewards for contributing to the network with quality, not just by staking. And this is something that I've been hearing about people when they critique Aether. So let's be real about that. Make sure you do your research, and make sure you read those white papers. Partnerships, again, more ambiguity a little bit here, but I do know that there's a lot of VC involvement, and with many partnerships here, but no clarity as to how those partnerships are structured. Citizen X, Ventures, Sector Capital, Merit Circle, these are all VCs. Now we can talk about VCs nowadays are frowned upon. We know that they go in and they get out. They go in, provide a lot of capital, allow a lot of exchange listings, allow a lot of marketing dollars, and then they take profit as soon as they start to make profits. And that's how we get those pump and dump scenarios. So a lot of people nowadays are very reluctant when they see a lot of VCs, and I understand. So partnerships, I'm on the fence here. I'm not really crazy about all these VCs. I'm not crazy about the fact that they do not put their very strategic partnerships up front and center and make them the most important aspect of their websites, and put a clear title partnerships, and that way we can get fundamentally bullish on their relationships, these types of relationships that they may have. Exchanges, tons of exchanges listed everywhere except the majors. Okay, so this is where we can see so a bit of volatility, a bit more volume in if we do get listed on Binance, or even Coinbase for that matter, and we can take this to a 10 out of 10. But at the end of the day, when you're waiting for that level of maturity, don't expect volatility. Don't expect so many gains. So this could be considered a good thing and a bad thing. The reason why I gave it 8 is because they're literally listed on every exchange other than the two majors, which means that they're listed everywhere. Lots of liquidity out there, but diverse over many exchanges. Now, I'm hoping that they're not going to be selling or anything like that. We're in a bull run. We're seeing a lot of good green price action everywhere. But could we get listed on major exchanges? That's the question. Okay, so 8 out of 10 right there. And then if you look at the tokenomics, the token info, the coin info here for a second, we got to understand that the max supply is 42 billion. Fully diluted is 3.55 billion. And then ultimately the market cap is 320 million. Guys, there's a lot of tokens that still need to enter. A lot. So you're going to expect a lot of token unlocks. Now, one thing that I want to be very clear on, as long as the demand outperforms the supply, we should see a great run still. We should see some great price action to the upside. Now, we have to understand in the bull run, we do see that the demand outperforms supply, based on FOMO, based on hype, based on fear of missing out, which is FOMO. Ultimately, that's what could be happening here. And of course, the fundamentals do support it. Great fundamentals here. But we also have to understand that once all of this hype and all of this bull run talk ends, and we start going into a downtrend for the bear market, guys, everybody's going to be taking profits. Why? Because look at the tokenomics, look at the overall the max the fully diluted valuation, guys. It's really heavy, it's really high, it's excessive. So we have to understand there's a lot of work to do here, and in the bear market people will be taking profits because of all the tokens being unlocked. Okay, so that's my take there. I wouldn't be having a multi-cycle strategy. without taking profits for the bear market. Let's look at the overall verdict. Guys, my verdict, it's a DPIM. It is a part of the DPIM narrative, a very, very strong narrative, of course. Arbitrum layer 2 for settling, for settlement, for rewards, and so on. It was listed in June the 12th, 2024, so it's still very, very young. Proof of rendering capacity, proof of rendering work. This is the consensus mechanism that rewards people for providing quality to the network. Okay, it's not just staking up and getting passive income. Good idea and value proposition, a solution to demand and shortage of computing power. True value, true rewards for providing something that the society needs. And when there's a problem, when there's a need, when there's an issue, and you can provide a solution, guys, the ideal scenario is that you get rewarded, and this is the opportunity. Ecosystem emphasis would be beneficial, highlighting development. So the ecosystem is not emphasizing anything important. We need clarity there, and I said this already 3 times, I know, but I'm going to have to clarify it again. Ecosystem, what is it that is being built? What is it that is partnership? What is it that is VC? What is it that is exchange listing? We need these all very clear. Okay, the team seems to have other obligations with a lot of involvement with VCs. There also, some involvement there with VCs, which kind of keeps me a little bit, skeptical here. What's going on there? What, your business management, and you're also VC, and you're also, CEO, and all these other, these titles, and you're full time in other companies. This lack of focus bothers me a little bit. No clear blockchain experience highlighted. If there is, guys, if the team is listening here, please give us some indication of who, and make them your champion. Put them right in the front center of that website. Who's basically bringing the blockchain talent to lead this blockchain innovation to the next level. I know it's not a layer 1. I get it. It's basically you're not running your own blockchain. You're using the Ethereum EVM. I get it, but at the end of the day, we need to know who's going to be making the shots as far as or calling the shots behind the blockchain infrastructure here. Okay, so that's very important, and a little bit more information about the overall decentralization behind the GPUs. Like, how is that really working? How in the nodes does the team or the have any nodes? How many of them do they have? How were they involved? Is there any involvement? And of course, a little bit more information about the DAO would be key. There is no information about the DAO, which I would appreciate to see how that works and that whole mechanism behind it. Because as a decentralized application, we want to know how the DAO works as a decentralized autonomous organization. A very active Discord community, to the point that it was so difficult to answer, get any questions answered. I wish there was a way that I could find another channel where we could take things a little bit more seriously, where I can ask some questions, maybe get a hold of some team members that are willing to answer questions and so on. But really, it's very difficult to get any questions answered there. Not the best scenario for people trying to get fundamentally bullish, especially the retailers that are looking to invest. A bit more clarity about infrastructure and GPU distribution, which I already talked about. All right, guys, so I know a lot of people are comparing this to Render. So let's talk about that. The reality is, based on its valuation, Render, has done very well. And just to catch up to Render, we're talking about 8.5x. Let's think about that. ATH has already done very well. If you think about it, in my opinion, it's already grown so much that the 10x possibility just to catch up to Render, is it worth the risk? And that for me is an important thing. Now, if we do see it come down, yes, and we see the overall market cap come down where it's a little bit more enticing, where we can see a little bit more growth capability, sure. But at 10x at this point, you have to understand this is not a volatile, this is not a small market cap project. Market cap right now, if we kind of scroll down here, we can kind of look at the market cap is $320 million market cap. Is medium to small. I get it. But if you think about what we're comparing it to with Render and, Akash, for example, the reality is there's not that much more even to catch up. Now, the question is it going to catch up and supersede? Is it actually going to pass Render's market cap? Which it could flip it. It could, definitely. So I'm saying here is this. Look, if it catches up to Render, we can definitely do an 8-9x. If it passes Render, I would see see easily getting a 10x scenario, getting to about 10 cents. 10 cents would be a great price target, nice round number, nice psychological number. If we get to that level, get defensive on those gains, I give this project an 8 out of 10. So not too bad here. DCing as soon as we get any retracement might not be a bad idea. Just control your position size based on your overall risk, so that you can control your risk management. All right, guys, I know you're here to talk about charts, so let's begin. Let's take a look at the price action to see exactly what is happening here with Aether. We do see that it went through a sideways consolidation for a little while, getting a bit of volume into this level. We can now conclude that it was an accumulation range, but the question is, on the daily, could we get a bit of a back test of this range and confirm it as support before we continue to the upside? And I would say that would be a great opportunity to buy the dip. At the current moment, I do see two zones of which I would be considering to accumulate. One right here. If we came down a little bit, and I'll make this green to suggest buying the dip. And then, of course, if we came back to the bottom of the range, which would be right around here. Okay, point of control is obviously a great zone to accumulate, obviously, because we could get some support right there as well. But if you think about it, what's concerning me is that if we come down and get support right onto this level, which is at about 6.7 cents, 6.9 cents, if we get a bounce there, it's not too off from this entry. So you know what? If we get a nice V recovery, so what? You got a nice opportunity here. It's just down here. If we came back down to range lows, this is where the risk to reward ratio becomes very, very lucrative. Because ultimately, if you can put a stop loss right into this bottom, you can mitigate a lot of risk, because we start to dip. We would start to fall into dip discovery, into the abyss of price action where there's no horizontal support anywhere else, right? So this is what we got to consider. Ultimately, there's not a lot of price action. We know this project is new, and if we even got onto the 4-hour and we start looking at momentum, we got overbought and we're slowly getting a bit of divergence here. Right now, the price action is neutralizing the negativity, and we could be coming down for a dip, but as long as we go sideways and we hold structure here, we have a volume gap and we stay above the volume gap and not fall right through, we're doing okay. If we fall through the volume gap, we're coming down to the entry level. Look at this empty space. So this is what's important here. If we see weakness here, based on volume, it's likely that if we do break structure and make a lower low, we do fall through and we come down to this level. And this is where I would be spamming buy orders. And if we went on the daily and try to find confluence here, guys, it's very hard, because everything, the momentum of the trend is moving to the upside. We see volatility overbought. We see the momentum trekking to the upside. We see a lot of good stuff happening here, but we also see this volume gap, which is confluent with the 4-hour. So be careful here, guys, because if we do come down for a dip, this is the level where I'm interested. And if we break back into structure or break back into the accumulation range, who's to say that we can come back all the way back down to the bottom of the range and prepare for a buy the dip opportunity right here, guys? Obviously, this is young. There's not a lot of TA. There's not a lot of price action. But if I did offer you any value in this video, do the channel a massive favor and slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. And if you want me to do a deep dive on any other project, join the Discord. There's a channel there where you can make a request, and feel free to join. Take care, guys. Have a good one, and don't forget, buy the dip.